Hey guys, it's Carter, your freakishly handsome chart analyst from Market Raven, and I'm coming at you today with junior analyst Oreo. And today we're just going to provide a very quick update on the S&P 500, where we think it's going to be heading in the weeks and months to come. So join us in this video. It's going to be very interesting. So if you recall what I had to say at the end of 2025 about the S&P 500, I saw this drop here in November, an A-wave drop, and I said we were likely working on a B-wave move to the upside, that as long as it didn't break up a resistance, which I said was around the $7,100 level, as long as we didn't see a sustained break above, which is that purple line up there, it's just sub 7,100, that we'd probably see a C-wave decline. Now, we haven't broken the level that I said we'd need to break to the downside to see the C-wave decline become more likely. However, I still believe that's what's going to happen in the March period or possibly early April period as well too. So we do still anticipate a C-wave decline to lower levels on this channel between possibly 6,500 and 6,100 to the downside. So we have been forming a wedge pattern to the upside here. This is not a bullish pattern. It's an exhaustive price action pattern here. And typically these break to the downside. And we have support on this ascending wedge bottom at around 6,850. So if we break 6,850 to the downside, anticipate a bit of a larger move to come. And then we also have this low right here at around 6,800. So a drop below the 6,850 and $6,800 level is likely going to take the S&P down towards the 6,550 and possibly lower levels as well too. Now, for this to be a corrective move to the downside, which I am anticipating, by the way, I'm not anticipating for this to be a major top in the market, but I am anticipating a decline of possibly 8% from the highs. So a drop below 6,500, in my view, is not going to be sustained. I do think we could go see lower levels, possibly the 6,450, $6,350 levels, even 6,100. And provided we hold the $6,100 support, I'm going to remain cautiously bullish on the S&P 500 for the weeks and months to come into the summer period as well too. So I do believe what we are about to see on the S&P 500 will be a drop towards the 6,550, possibly lower levels as well, 6,450 support, 6,350 support, and possibly even 6,100. What we don't want to see here for this to remain a temporary correction is a sustained break below 6,500. We want to sustain above these lows here. This is an important structural level. We don't want to see a sustained break below that level. Yes, we can go significantly lower than 6,550, but I want it to be a short-term move to the downside. If we do break below 6,550, I want to see a swift recovery above this level again too. Because if we start to break below and hold it as resistance, I'm going to determine that it's likelier the market has actually indeed topped and that we're going to see much more downside to come after that. But I just want to remain crystal clear that even if we do see an 8 to 10% drop on the S&P 500 from the highs into the 6,400-ish area, that it is more likely just going to be a temporary pullback, temporary correction that's going to lead to new highs in quarter 2, quarter 3, 2026. That's what I think is much more likely for the time being, until we see a sustained break below these levels and a corrective bounce. Then we can look for more downside. However, I'm favoring an ABC correction to the downside rather than the start of a downtrend. So that's all I really have in this video. A drop on the S&P 500 is likely. I think it's probably going to take us back towards the mid to lower 6,000s, but provided we don't see a sustained break, by that I mean consistent weeks and months holding 6,550 as resistance on the S&P 500, or a break below 6,100 to the downside, I don't think we are going to be falling into a bear market or starting a new downtrend. Sorry, the end of the video cut off. You didn't get to see Oreo wave goodbye in my original take, unfortunately, so maybe next time. But anyway, hope you liked the update. Stay safe in the markets.